back to Business Next. We are continuing our conversation with retired CPA Paul Hentz, well-known small business advocate here in the state of Michigan. He's been giving us advice for small business owners about filing their taxes before April 15th. So, Paul, let's kind of project forward past April 15th and assume once our listeners have their tax returns all filed, are there some things you should be doing now after you've got the filing all completed?
As absurd as this sounds, and maybe only a CPA would think this, but April 18th, because I think the filing date's the 17th this year. On April 18th, you should sit down with all those tax papers and look at it and say, okay, this is what happened in 2012.
Okay.
What am I doing next year? So it's a guideline. You take it's like developing a map. So there's software programs. We use several different software programs to analyze financial statements, and they're programs for small business. And one in particular we used compared your business to a similar size business, and it compared gross profit, compared net profitability, officers or owners' compensation. It went through the balance sheet and compared all your ratios and everything, and it gave you an opportunity, or it gives you an opportunity to say, average I may not want to be average. I may not. That may not be my goal, but average tells you what other people are doing. And if you're way below average, you got to ask yourself why. If you're below average profitability, you got to ask yourself why. If you're way high on profitability, you might question whether your records are correct. Whether maybe your inventory is being produced wrong. And years ago, I showed a man this particular report, and I told him his labor was very high. And he took exception to that. He said he kept a real tight rein on labor and on and on and on. Maybe 2 weeks later we talked again, and he said, actually, he said, I got to thinking about, we've got a guy on the payroll that's been here forever. He was here when I bought the business, and he said he doesn't really do anything, and we pay him quite a bit of money, so I'm going to let him go. And I thought, well, God. So that's what these analysis of your year-end do, is they point out areas that you might want to look at, where you might have something in there that you're used to, or you've done it that way for an advertising method, a trucking method, a shipping or receiving method. You may have employees you don't need. You may have employees that are duplicates, duplications of services. There's all kinds of things. If your overhead is too high, you may look at your facilities, look at your utilities. There's a lot of information in there, and it's in business. In reality, a lot of people think when you own a small business that things just happen to you. In the reality of a small business, the actual thing is that you make things happen as opposed to things just happen. And if you think of business as something where you manage the profit, where you make the profit, not just there and it happens to you, then you'll look at your financial statements and figure out what's good, what's bad, and you go with what's good, you correct what's bad. And last night my wife and I were at a restaurant. I'd never heard of this before, a small restaurant, and the owner puts out bids for her supplies every week. Her vendors have to bid every week for the produce. I never heard of anybody doing that. And those are the kind of things where you read your financial statement and say, my cost of goods sold is too high. How do I bring it down? Financial statements are not the answer to things. At this time, they should be raising questions for you.
Well, Paul, I think that's kind of a novel thought, that your tax return could really be used as a management tool to help you be a better, more profitable small business owner.
Well, at whatever stage you're in business, the object is to make money, and the way to make money is to understand the process, and the way to understand the process is to look at the financial statements. The financial statements are a report card. I think the person who told me this expected me to be offended by it, but he said, Paul, you're nothing more than the scorekeeper. And I said, well, in the last 5 seconds of the game, isn't it pretty important to know what the score is? And so people who disdain accountants say, well, they're just the scorekeeper. They are the people who should be feeding you the information that helps you make the decisions that make your business prosper. And so if we're just the scorekeeper, it's real important to know what the score is. And it's real important to know what time it is in the game. How late in the game are you, and what have you got to do to catch up and win? There's a lot of value in that.
Well, there's a lot of value in the advice we've been getting from retired CPA Paul Hentz, who's been talking to us about tax return filing tips for small business owners. You're listening to Business Next, a part of the Michigan Business Network.